listening to Checking In on Finance. Willing the good of another.
Yeah, January. We have President Trump in Davos. We've got Bitcoin. We've got people not allowed to say literally. And we've got buybacks. Welcome to Checking In on Finance, brought to you by IIE Financial. IIE Financial, willing the good of another. Visit the offices today, iiefinancial.com, or call the offices 832-953-4998. That's 832-953-4998. I am your host, Chuck Fulkerson, joined by the illustrious Annie Fulkerson. Good to see you,
So
as
excited
always.
to be here. A lot to talk about this week.
Yeah, it was a good week. You know, we always kind of kick off and talk about the markets, and we are living in the beautiful town of Houston, Texas, right? So Houston is, as I'm looking out the window, it's one of those days where it's kind of like a bag of Oreo cookies. Like there's light, and then it's dark, and then there's light, and then it's dark because the sun comes out, the skies are gone, the gray comes, the sun comes. It can't figure it out. It's like, wasn't there a movie Sybil, right? Or that, no, there was a movie that came out recently where a guy had like 20 different personalities. That's what our weather's been this month.
This whole year since the hurricane.
Yeah.
Really?
Like you got some days where it's 85 degrees and you are in shorts, and then 2 days later it snowed.
It's snowing.
It literally snowed 3 days after being 85 degrees.
Mm-hmm. And it lasted. It stuck. We had snow on our roof
Stuck
for
4
4 days.
Stuck for 3 days. So, you know, big week in the sports world as well, as we're heading into nearly Super Bowl week. This week is Pro Bowl weekend for those of you that watch the NFL. And the Pro Bowl, I tend to find it as a completely irrelevant game. But today, your sister said, isn't the Super Bowl this week? Isn't Tiger Woods playing against the Yankees?
The Boston Yankees.
Yeah, isn't Tiger Woods playing against the Boston Yankees? And I will tell you, anytime it's a Patriots Super Bowl, that's kind of how I feel. Sorry, New England.
Yeah.
It's just as a guy who was born and bred, who's a Steeler fan, it's hard seeing the Patriots in yet another Super Bowl.
I don't know. I'm glad you keep me up to date on things, because since we had kids and now with homeschooling and running two businesses.
Oh, no chance.
There's like the last time I sat down and watched a full football game, I think was maybe 6 years ago.
Yeah, well, and at this point, I don't think I've had a chance to watch really very many this whole year. I only watched one or two. So I will tell you, probably not going to watch Super Bowl either. Mm-hmm. But anyway, so talking about the markets as we talk about every week, we ended the week at just another all-time high. We got to a high of 2876 in the S&P, closed a little bit off of that all-time high at 2874 3/4. So the S&P continues to march up. It continues to march up. There continues to be nothing but strong bullish sentiment. And I looked a little bit earlier today, and I was doing a little bit of research a bit earlier today. And in that research, I found that the S&P for the last 4 weeks has closed just about on its high. So if I look at a chart of the S&P over the past 4 weeks, it's closed every week just about right on its high. And that high that it closes on, that's almost unheard of for the S&P to close on weekly highs for 4 consecutive weeks. Now, what that means to the average investor is that every week they're going home happy, right? Every week they're going home happy. But, you know, there was a lot of stuff that went on over the weekend, right? There was, really over the weekend, the World Economic Summit, and President Trump spoke at the World Economic Summit.
Which was a big deal.
It was a big deal. It was a big deal. And so as we kind of continue to march higher, I heard somebody today or a couple of days ago, I think I was watching CNBC, kind of flipping through the channels, and one of the things that she said is that as this market goes higher, there's more and more people that are still just sitting in cash. They're just sitting in cash because they're waiting for that other shoe to drop. But they've been waiting for that other shoe to drop for 4 years now.
Well, you even got a call from an advisor who shorted the market back in October.
Yeah.
For his clients.
Yeah.
I would not want to be one of his clients.
No, and I've had that, you know, that's one of the scary parts about when we look at what the market can do. The market can stay irrational longer than you can stay solvent. And sure, it's absolutely irrational. And the fact that we've closed on the high for 4 consecutive weeks, or if not on the high, just slightly off of it, right? There's been no profit taking on a Friday. that's almost unheard of. To have no profit taking on a Friday, you'd think that sometimes people would not want to go home with it. So, reading a couple of pieces about, what does a strong January look like, right? So the Dow is up 7% so far for this year, which at this moment would be the 6th best January in the last 68 years. That's a long time. Up 7% in the Dow so far this year. And interestingly enough is that in the past years where there's been a 5% plus gain in January, we saw an average return of 22.2% for the full year. So what's your thoughts on the continuation of that, right? What's your thoughts on the continuation of this meteoric rise?
Well, we talk so many times about how, we can look at the overvaluation, of the market, and you've done articles on the melt up,
Right.
and what a bubble looks like. We can look at all of the statistics about Januaries have been positive 65% of the time. If they're positive, there's this likelihood that the market will be, positive for the rest of the year because it will drive fundamentals. Theoretically, it will drive
Sure.
fundamentals, and then we can be relatively confident that we could have a good rest of the year. By that same token, I think that while all of those statistics might be helpful and entertaining to look at, I think the thing to look at overall is to not fight the market.
Right.
Us as individual investors with, we have clients from anywhere from a couple tens of thousands of dollars to millions of dollars, right? We're not moving the market.
No.
We need to participate in the market, have a plan for what the market is telling us, capitalize when we can, and protect what we have when the market starts to, pull back based on quantitative levels. So that's kind of what I feel for. What I feel about that.
When you say that, it reminds me of I used to have a friend named Rudy, and he was Russian, right? And so when you said that, it reminded me of something he used to tell people all the time. He would say, "You don't have your own opinion. No having your own opinion in the markets. The markets tell you what to do. Don't have your own opinion." And that's it, right?
Yeah.
You shouldn't have your own. You shouldn't decide what you think the market's going to do.
Or what you think the market should be doing.
Definitely not what it should be doing.
I think there's a lot, we've heard from several investors that are just totally baffled by the fact that the market, quote unquote, should not be this high.
Yeah.
And they're reacting and trading as if the market should not be this high. And they're missing out. First of all, if they're short, they're losing a tremendous amount of money because the market is going straight up.
And even if you're in cash, you're missing the lost opportunity is humongous, but combine that lost opportunity with the inflationary factors that we will have.
Yeah.
Right? So being in cash is a negative position. It is. There's no question about it. There's a negative connotation around.
Because our biggest asset is time, and you can't get that back.
You can't get it back, and you're also losing the value of the purchasing power of your currency.
Right.
Right? The US dollar is continuing to fall. And that was one of the things that, President Trump, when he was in Davos over the World Economic Summit, he spoke a pretty strong message. I mean, it felt like a pretty strong message that he talked about, specifically around, his job is to put America first, but it doesn't mean America. I kind of liked the quote, and we try to stay as clearly away from politics as we can, but it was at an economic summit, right? So, but he said America first doesn't mean America alone. And I like that, right? He basically was out there doing an advertisement saying, bring the American companies, come to America, come do business here. And we've already seen some impacts of that with the tax cut. The tax cut has already shown us some of the impacts of what's happened in regards to, one of the things that President Trump talked about in his speech was that there are companies that immediately started giving back money, right? $1,000 to employees or $2,000, and I think I saw the other day, I forget who it was. Somebody gave back $3,000 to some of their employees. But then right on the other heels of that is what happened with Lowe's, right? And Lowe's came out with a story that they're doing a stock buyback. So the proponents of the tax plan are saying, listen, this allows the companies to give more to their workers. It allows the companies to invest more in infrastructure. It allows these companies to invest more in growth and jobs. The opponents say, yeah, but then they're just going to buy back their own stock and artificially inflate the market. So when we look at that, here's what I tell everybody. You're sitting at home. You've got your Samsung monitor, you've got your LG monitor, you've got your Dell laptop, your HP laptop, whatever in the world you're looking at. What can you do about that? Nothing. You can't do anything about that. But you can have a plan to react to what the market does based on all of it.
Well, but if they're buying back their stock and the stock is going up, we can participate in that upward movement anyway, though, can't we?
Sure. And that's my point, is that we can't control what these companies do.
But we
with
can
these tax
participate
but we
in
can
it.
participate. See, and I think the mistake a lot of people have is that they think that we are going to get control of the market, right? That they're going to be able to control it, or they're going to be able to outthink it. Don't outthink it. Don't outcontrol it. You can't. I forget where I said this. You can't punch where I heard this, but I heard a phrase one time. You can't punch a wave. You can't punch a wave. It's not going to do any good. You've got to let it wash over you and go with it. Well, the market's kind of doing that same thing. And what happens is some people are out there right now trying to punch the wave, and they're just going to get hurt. If you feel like you keep punching the wave and it's not going your way, help us. Let us help you build a plan, right? Call our offices. 832-953-4998. That's 832-953-4998. And maybe we can help to build you a plan. Maybe we can't. We do our best to help everybody, but some people are the right, are really the right fit, and some aren't. But if we can give you a hand, give the offices a call, or just go online, visit the website, iiefinancial.com. Thanks for listening to Chuck and Ann on Finance, and we'll be back right after this.